Listen, if you have a stock portfolio, a 401k, or anything denominated in US dollars, what I'm about to show you has cost people everything repeatedly throughout history. And it's happening again. The Roman Empire, 260 AD, currency died. British Empire's currency died in the 1940s. German Weimar Republic currency died in 1923. Soviet Union currency died in 1991. Different cultures, different centuries, different reasons. Same ending. I'm Grace Park. And what I'm about to reveal is why currencies fail, how often it's happened, and most importantly, the framework I use to position my portfolio so that whether I'm right or wrong about timing, I come out okay. Before I show you the pattern that's repeated for 2,000 years, before I explain how I'm positioning my own money because of it, I need you to understand something. Right now, for the first time in history, the US government is paying more to service its debt than it spends on the entire military. Just let that sink in. Now hit that subscribe button, smash it, because what I'm about to explain is not doom and gloom. This is pattern recognition. The same pattern central banks are positioning for by buying 863 tons of gold last year, the third year in a row of buying over 800 tons. And while you're at it, hit that like button and drop a comment telling me what percentage of your portfolio is in real assets versus cash, because that allocation determines whether you survive currency degradation or get destroyed by it. Let me start with Rome because it's the perfect case study. In 64 AD, Emperor Nero had a problem. Massive fire destroyed most of Rome. Some rumor he started it. He had expensive wars to fund. And like every politician since, he really enjoyed spending money he didn't have. Nero couldn't fire up a printing press, but he could do the next best thing: debase the currency, the Roman silver coin, the denarius. This coin was meant to be silver, almost pure silver, about 95% silver. What did Nero do? He said 95%, let's bring it to 90%. No one's going to notice. Guess what? His successors were inspired by this lunatic. By 260 AD, about 200 years later, the silver in the coin was no longer 90%. They'd lowered it and lowered it and lowered it. It was 5%. Some old coins we're digging out still have 2% silver. It was basically a copper coin with a very thin silver wash sprayed on top. What happened? Hyperinflation, loss of trust, economic collapse. Soldiers demanded payment in goods instead of coins because coins were worthless. The empire fractured. If you asked any of these emperors what's the value of the silver coin, the denarius, they would have said it's worth exactly the same. This silver coin is a silver coin. It's worth what it's always been worth. Sound familiar? The official story is everybody is fine. Your money is just as good as it always has. But the reality is your money buys less. Let's go back to the US and the dollar because that's where most of us put most of our money. Have you noticed prices are rising faster than your paycheck? Your parents bought a house for what now seems like pocket change. Your savings account earns 4% if you're lucky. But real prices seem climbing at 7, 8, or 10% a year. Things are starting to feel expensive, but no one's calling it a crisis. The Fed calls it transitory inflation, trending towards our 2% target, which basically means we're printing money, you're getting poorer, but please don't panic because we have a plan. Things look stable on the surface, good GDP numbers, job reports okay, but something feels off. That disconnect you're feeling? It's not irrational, it is historically consistent. Everybody says every currency dies. Let me be specific about what we mean. Most people hear that and imagine Mad Max scenario where dollar bills are literally worthless and we're all bartering with canned goods. That's not usually how it works. Currencies don't disappear. They degrade slowly, quietly over years or even decades. You still get paid. You still go to work. You still buy groceries. The money still works. But there's a catch. It buys less. Since 1913, the year the Fed was created by the banks, the US dollar has lost how much value? What do you think? Drop a comment. It has lost 96% of its purchasing power. Not conspiracy theory. That is Bureau of Labor Statistics data, government's own data. What cost your grandparents $1 now costs you $30. That's not normal inflation. That is currency degradation. You're not special. This isn't unique. This isn't new. It certainly isn't unprecedented. This pattern has played out over and over. The people living through it thought their currency was different. Their government was smarter. The situation was special. It never was. There's a good rule one of my mentors taught me. When people say this time is different, tell them it's not. Talk to our friends in Great Britain, now just Britain. They have a currency that used to be pound sterling, the currency of currencies, insanely valuable. When Brits went abroad, they thought they were visiting third world countries. Everything was cheap. Talk to Brits now. The pound has lost incredible value compared to other currencies. Salaries basically flat for 20 years. I used to live in UK. Got my first job as a lawyer. First paycheck was $28,000 a year. Seemed like a lot of money. It wasn't. Right now, if you start as a lawyer, you get paid almost exactly the same thing 20 years later. Living costs have exploded. The value of the pound's gone down. Value of salaries gone down. And most Brits put their money into UK stock market, the FTSE, which has massively underperformed US markets. They've seen their pensions tied to stock market go up 2% a year. US for same period up about 13% a year. That makes huge difference over 10 years. One is dirt poor mouse. The other is loud brash American friend. This didn't happen suddenly. Kicked off in the 1940s when the empire crumbled. It wasn't sudden apocalypse, it was slow erosion. Most people don't notice it. Most people still don't notice it. The Weimar Republic, that one's famous. Workers paid twice a day because money lost value so fast. People used wheelbarrows of cash to buy bread. Currency replaced at rate of 1 trillion old marks to one new mark. Russia, the ruble collapsed in 1991. Lifetime savings became worthless. People who worked entire lives found retirement accounts wouldn't buy a loaf of bread. Different reasons, different technologies, different political systems, different centuries, patterns the same. Government takes control of money. Government spends more than it collects. Government prints money to cover the gap. Currency loses value. People who saw it coming held real assets. They survived. People who didn't, they didn't. Why does this keep happening? Why hasn't any government in history been able to resist this temptation? The incentives are all wrong. Think about it from a politician's perspective. You have two options. Option one, be responsible, cut spending, increase taxes, lose the election. Your opponent who promises everything wins. Option two, fund everything. Free stuff for everybody. Checks and bailout money and dividends. Just hand money out. Consequences are down the road. By the time the bill comes due, you're either retired or dead. But you were popular. Do you choose popular or unemployed? Those are the two options politicians have. Problem is, once you start handing out money you don't have, the US government has $39 trillion in debt. To service that debt, just to pay interest, not pay it down, government spends well over $1 trillion, more than they spend on entire military. How do they pay it? New, freshly minted debt pays interest on debt, which means interest creates more debt. Debt creates more interest. What's the only politically acceptable way out? You can't default. That ends the party. You can't raise taxes enough. Numbers too big. You can't cut spending enough. Politicians won't survive. Somebody said, tax all billionaires at 100% of income. Problem is, once you raise taxes above certain point, billionaires leave. They take their money and companies with them. Look at UK, they raise taxes, collecting less money, because billionaires move to Monaco or Dubai or Italy or Portugal. Not viable option. Tax the masses more, everyone hates the billionaires, but start taxing everybody, you get voted out of office. The printing press is the only option. You print money, more dollars, dollar worth less, debt held in dollars, so debt worth less. If you're American holding cash or have salary paid in cash, you're paying for the printing, but it's quiet, silent, no tax bill. Just slow, steady erosion of everything you've saved. You might be thinking, but Kevin, America is different. We have world reserve currency, biggest military, biggest economy, all the technological innovation. That might all be true, but was Rome not most powerful empire of its age? Was Britain not greatest empire of its age? They ruled a fifth of the world. They had world's reserve currency before United States. Having world's reserve currency does not prevent currency degradation. It delays it, buys you time, but doesn't buy permanence. Average lifespan of reserve currency is 94 years based on historic data. US dollar has held reserve status for 100 plus years. That doesn't mean it collapses tomorrow, but it means we're in uncharted territory. We're past average expiration date. It's like yogurt you're looking at going, it's a week past expiration date, but I still really want this chocolate yogurt. To understand why we are here, we need to understand what central banks are doing, because they're not acting like everybody is fine. Central banks bought 863 tons of gold last year, third year in a row of buying over 800 tons. Poles, Kazakhs, Brazilians, Turks, Chinese, all accumulating gold at fastest pace in 50 years. Why? They understand what's happening. They're diversifying out of the dollar, preparing for a world where dollar is no longer sole king. Why do I care? Because central bankers are the same people who print the money. They're hedging their bets with gold, not their own currency or any other financial instrument denominated in their currency. Where are we with this reset? What are the signals? What should you watch? Write these down. Signal 1. Central banks changing behavior. They're buying gold quietly. Backdoor stuff. Signal 2. Interest payments exceeding key government budget items, exceeding military budget in U.S. That's a red flag, means debt compounding faster than economy can handle. We crossed that threshold in 2024. Signal 3, watch how politicians and central bankers talk about economy. Notice how many things require strong GDP growth, mostly healthcare inflation and government spending, low unemployment that doesn't count people who stopped looking, healthy consumers paying groceries with credit cards, and buy now, pay later. Those things aren't healthy. They should be in quote marks. Signal 4, look at what wealthy individuals and institutions actually do. Follow the money. That's my key mantra. Everything else is opinion and politics and noise. What do they own? Real estate, buying up farmland, businesses that can hike prices, commodities, gold, productive assets that go up with inflation. Before somebody says Warren Buffett has all his money in cash, no, he doesn't. He has it in bonds. He just calls it cash because they're cash equivalent, but they pay him interest. I want to talk about gold and silver because these always come up. I want to be clear. I'm not a gold bug. I'm not one of those guys who thinks we need to go back to gold standard or that holding gold is ideology. But I'm a pattern guy. I'm a follow the money guy. And the follow the money path is clear. Every time trust in paper currencies gets eroded, every time governments push printing press too hard, gold and silver re-enter the conversation. They have one unique property paper does not have. There is no counterparty risk. Write this down. When you hold dollars cash, you're trusting U.S. government. Government is your counterparty. When you hold gold, you're trusting physics. Gold is gold. Doesn't need anybody's promise to have value. There's no inherent value in gold. It doesn't produce anything. You have to put it in storage and pay insurance. but enough people in the world believe it's got value, including central banks. World Gold Council found 95% of central banks expect global gold reserves to increase this year. Nearly half said they're planning to add to own reserves. Not conspiracy theory. They're the people who run the system. They're hedging. For me, gold and silver are insurance, not speculation. I'm not trying to time the gold market. I'm not waiting for gold to moon. I hold some because history shows in every currency crisis, people who held real assets outside the system did better than those who did not. Who loses? Problem is, it isn't obvious, it's quiet. If you're diligently saving money in savings account, you're losing purchasing power every year. If you're earning 4 to 5% interest, real inflation on stuff you actually buy is often higher. You're falling behind. If you're a retiree living on fixed income, pension, or Social Security, your checks might go up 3% a year. But if costs go up 6 or 8%, you're getting squeezed. Do that for 10 years. Do the math. Your standard of living drops a little bit. You don't notice at first, but after a while, you do. People on sidelines say, I'll invest when things calm down, or I'm waiting for better entry point. Every month their wait is another month where currency loses value. Cash is melting like ice cube. This crisis does not hit all at once. No dramatic event, no headline screaming currency failure. It happens slowly and quietly year after year. The people who lose most don't realize it's happening until they look back 10, 20 years later and wonder why they can't afford what their parents could. But there's good news. This is not doom and gloom. Every currency crisis throughout history made some people wealthier. Some came out ahead. Who are they and what do they do differently? People who own businesses with pricing power. Say you're the only electricity company in your state. If you raise prices, would people turn off lights? No. That's pricing power. Or your Amazon with cloud business. If they raise your bill 10%, you're going to complain and pay it. Petrol station, if one raises price 2 cents a liter, you cross the road to other guy. They have no pricing power. You want to own piece of business that can charge more when costs go up. That's protection. Real estate, it's called real because it is real. You can touch it. You can live in it. Actually there. Exists in physical world. Tends to move up in value with inflation because your house doesn't care about monetary policy. It's still a house. Nobody built another million houses. There are about as many houses now as there were a week ago. Metals. You could make this broader category of commodities, but let's keep it simple. Gold and silver, the shiny things, insurance, not whole portfolio, some allocation to assets outside money printing system. Worst thing you can do is get fearful and go into cash. Cash is piece of paper, IOU from someone who can hand out as many IOUs as he feels like. Imagine friend at school borrows $5 and gives you $5 IOU. Then you see him do that every day to every student. After a month, 30 days, he's issued thousands of pieces of paper. You kind of get idea you're never seeing your money back. Your IOU is worthless because there's so many of them. That's what paper money is. You want to be an owner. Real estate, metals, good quality stocks. Savers get crushed. Owners get richer. Not about being smart. About understanding that in an inflationary world, stuff beats paper. How do I actually apply all this? Too many people act like they know exactly what's going to happen and when. I don't know that. Nobody knows. Anybody who tells you they do is trying to sell you something. Principle 1. No single bets. Don't put everything in gold. Don't put everything in stocks. Don't put everything in real estate. You could be wrong. Wrong about timing and even outcome. Diversification is not about maximizing returns. It's about surviving when you're wrong. Principle 2. Own assets, not cash. Some emergency fund is reasonable. Stocks with pricing power, some real estate, some gold and silver. I keep minimal cash. but I have quite a lot of income stream. If you only have one income stream or none, you need to keep some cash for unexpected things. Principle 3, some insurance, gold and silver. Maybe add Bitcoin to that list. That's esoteric question for you, whether you think that'll take off. Typically, when things get hammered for 2 years like Bitcoin has, they tend to recover because everybody who hated it is out and all people who wanted to sell are gone. Principle 4, humility. I don't pretend to know the time. I don't pretend to have all answers. I just try to structure things so across wide range of outcomes, I'm okay. That's what I learned from mentors. You haven't got crystal ball. You're not genius. You just want to make sure if you're wrong, you're still okay. What do I do? Every week I put money to work. I don't try to time entries perfectly. I don't wait for perfect. I look at patterns, repeatable, predictable patterns in market. I look for ones that look best. Not perfect, but best. Then I put money into those. Then I make sure we have really tight risk management. I understand cash sitting in bank account is guaranteed to make me poorer. So I keep moving cash into assets that have historically preserved and grown wealth through these periods. Clear. I'm not financial advisor. I'm not registered as anything. You might want to talk to financial advisor or registered investment advisor. I'm not one of those. I'm not predicting dollar collapse tomorrow. I'm not saying sell everything and hide in bunker. Most currency degradations take decades to play out. Base case is system persists and slowly erodes. I'm bullish on stock market, seriously. In inflationary environments, stocks are one of best places to be. Companies can raise prices. Their profits go up, stock prices follow, there's more money around. Therefore, asset prices generally get inflated. Dollar will probably remain world's reserve currency for years, maybe decades. I'm not suggesting you dump all dollars tomorrow. This isn't about fear. This is about structure, about understanding environment you're investing in and making smarter decisions. Roman Empire didn't collapse overnight when they started playing with silver coins. It took centuries, life went on, people adapted. British Empire didn't disappear when pound lost reserve status. Britain is still there, just without the great. What I'm describing isn't apocalypse, it's gradual transition. People who understand that transition, who position for it, will do better. People who ignore it will get slowly left behind. I think we're already seeing that. I think we've seen that last 20 years. I'm 45 years old. I've seen it. I see it with people who work in jobs I used to work. They're getting left behind. If you think about currency resets, you think market's going to crash and banks close. That's almost never how it works. Damage is cumulative. Little erosion this year, little more next year, compounding over decades. Most of the time, nothing dramatic happens. No headlines, no crisis, just slow and steady transfer of wealth from people holding paper to people holding stuff. Because nothing dramatic happens, people assume nothing is happening. They keep waiting for signal to act. But the signal is the pattern itself. The signal is $38 trillion debt. Interest payments, central banks buying gold. If you want to wait for bigger signal, it's free world, but you might lose more than you think. Let me give you my honest assessment after 10 years analyzing currency markets and historical collapse patterns. Doing nothing is a decision. Every currency has a lifespan, not doom and gloom, just historical fact. Romans, Brits, Soviet ruble, different centuries, different millennia, different systems, same ending. People notice the ending. They don't notice when it starts. My hope is you're now in position to notice when it starts and make smarter moves. I'm going to keep doing what I'm doing. Stay invested. Keep moving cash into real assets. Keep diversified across outcomes. Keep humble about timing while confident about pattern. Now I need you to do something for me. If this analysis has opened your eyes to currency degradation patterns throughout history, if you understand now why savers get crushed and owners get richer, I need you to hit that like button right now. I need you to subscribe if you haven't already. And I need you to drop a comment below telling me what percentage of your portfolio is in real assets versus cash, because that allocation determines your financial survival over next 20 years. Share this with anyone sitting in cash, waiting for perfect time to invest. They need to understand currency degradation is happening now. They need to see the historical pattern. They need to know stuff beats paper every single time. Every currency dies. Roman denarius from 95% silver to 5%. British pound from reserve currency to just another fiat. US dollar lost 96% purchasing power since 1913. The pattern is clear. Position accordingly. Your move.